Symbotic just dropped their fiscal Q4 earnings, beating expectations with $618 million in revenue, and the stock broke all-time high, surging to new heights at $87. Is this the start of an epic rally or a peak before the pullback? In the next 15 minutes, I am dissecting SYM through my six-factor framework, from their revolutionary AI robotics empire to the leadership driving it all, and delivering an overall rating with a 2026 price target that could redefine your portfolio. This beast could blast to $120 if AI-driven robotics adoption accelerates and that $22.5 billion backlog ignites. Stay logged in, one rating could redefine how you trade. What's up everyone, I'm Shubham, and in this Powerhouse series, we are laser focused on uncovering stocks with jaw-dropping potential, the kind that could deliver 100x returns and build legacy wealth. Symbotic Inc. goes by symbol SYM, unleashed Q4 fiscal 2025 earnings. Revenue climbed 9.4% year over year to $618 million, fueled by a colossal $22.5 billion backlog, and shares rocketed upwards. Is this surge sustainable or time to take profits? Before we dive in, this is not a financial advice. I am sharing my research for educational purposes only. Markets are risky, so you need to do your own research. Now let's unleash my six-factor framework, rating each 1 to 10 for that game-changing final score. If this vibes your investing style, hit the like button and subscribe to Neural Net Words for regular stock breakdowns. Let's kick it off with factor number 1, which is business model. Symbotic Inc. is listed on NASDAQ as SYM. Founded in 2007, SK Speak System, they rebranded to Symbotic in 2012 and hit the public markets via SPAC in 2022. Based in Wilmington, Massachusetts, they are trailblazers in AI-powered robotics for warehouse automation, converting disorganized supply chains into precision-engineered powerhouses that slashes cost and amp up speed for major players. As a frontrunner in comprehensive automation, their revenue streams are diversified and synergistic. The powerhouse is their AI-driven robotic systems, the primary growth engine featuring self-operating robots for case and pallet management, all enhanced by in-house AI. Their star product, the Symbotic system, ramps up efficiency by 25 to 50% over outdated setups, pulling in cash from hardware sales, installations, and integrations. Next, software and AI offerings deliver cutting-edge algorithms for inventory tracking, order processing, and data insight with subscription models ensuring sticky, recurring revenue through constant upgrades. This is the kind of predictable income that investors love. Then, maintenance and support lock in long-haul contracts for oversight, enhancement, and fixes. This area exploded 40% year over year in 2025, reliable cash inflows providing stability amid growth. Rounding it out, consulting and integrating tailored solutions to retrofit client facilities seamlessly, helping businesses transition without tearing everything down. Symbotic's journey includes landmark decisions from 2017 to 2020. They snagged the Walmart mega contract for automating more than 42 centers, boosting credibility and scale. The 2022 SPAC raised $725 million for turbocharged expansion, giving them the capital to invest in R&D and market reach. Between 2023 to 24, the $550 million Greenbox acquisition via SoftBank joint ventures amplified their reach, adding new capabilities in logistics and joint ventures that opened doors to more clients. In 2025, they ventured into international markets like Canada and Europe to tap global demand and swelled to backlog of $22.5 billion, which represents committed future revenues that's like money in the bank waiting to be recognized. Gone are the days of Symbotic as a mere robotics outfit. They are now a supply chain titan, thriving on e-commerce surges and labor gaps that make automation not just nice to have but essential. I'm scoring their business model an 8.5 out of 10 for innovation that's scaling like wildfire. They have been in the business for a long time and have managed to be a key player for all those years. Comment if you're liking SYM's AI automation dominance. Please don't forget to subscribe to Neural Network if AI stocks fuels your fire. Let's move on to factor number 2, financial performance. No matter how brilliant a company's business model is, it all comes down to whether the numbers back it up and show real progress towards profitability and sustainable growth. The fiscal Q4 earnings are fresh and impressive. Revenue came in at $618 million, which is a 22.8% increase year over year from $503 million, and it beat estimates. However, they reported a net loss of $3.5 million. That's an improvement as losses are narrowing. EBITDA, which is a key measure of profitability, hit a negative $5.2 million. Looking at the full year picture, 2025 revenue soared to $2.2 billion, marking a 23% jump from $1.8 billion in 2024. To give you some historical context on their growth trajectory, in 2023, revenue was $1.2 billion. It grew 50% to $1.8 billion in 2024, and now up another 23% to $2.2 billion in 2025. Cash reserves are strong at $1.2 billion, with short-term debt remaining negligible, giving them plenty of financial flexibility. To give you a clear picture of their progress, let's look at some comparison tables. I'll pop those on screen for you to follow along. Pause if you need to digest the number. You can see revenue climbing steadily each quarter, with losses narrowing in Q4, a positive sign of efficiency kicking in as they scale. Operating expenses did rise due to heavy investments in research and development to stay ahead in AI, but the company has been consistently narrowing their losses throughout 2025. The cash flow statement shows positive operating cash for the year, which is more than enough to fund their capital expenditures on new tech and expansions. Q3 dip was likely for heavy investments in expansions, but Q4's positive flows show operational strength returning, with free cash flow turning strongly positive. Now let's break down the balance sheet for clarity. Total assets have grown significantly to $2.4 billion by the end of Q4 2025, largely driven by revenue growth and strategic equity raises. Total liabilities have increased 39% from previous quarter to $1.9 billion, and the current liabilities stand at $1.7 billion. Shareholders' equity is now at $483 million, which is growing way slower than their debt, signaling rapid expansion. Their current ratio, which measures how easily they can pay off short-term debt with short-term assets, is stable, indicating they are in a decent position to handle any bumps. Their debt-to-equity ratio is concerning. They are aggressively using debt to fund their expansion. Overall, I'm rating their financial performance a 6 out of 10. They are in a stable position short-term, but are relying on debt way too much for their rapid expansion. They also haven't turned profitable yet. If these numbers have you rethinking your portfolio, drop a comment with your biggest takeaway. Do you think SYM is over-leveraged right now? Moving on to competition and external factors, often analyzed through what's called the PESTLE framework. These are the outside forces beyond the company's control that can either propel a stock forward or hold it back. So understanding them is crucial for any investor. First, on competition. Symbotic is up against some big players like Amazon Robotics and Honeywell, as well as nimble startups in the warehouse automation space. What sets Symbotic apart is their proprietary AI that allows for processing speeds up to twice as fast as many competitors. The market is competitive and getting more crowded, but the overall demand for automation is booming, especially with e-commerce growth. So there's plenty of room for top performers like Symbotic to thrive without the competition being a total deal breaker. To dig deeper into the external environment, let's break down the PESTLE analysis step by step. Starting with political factors, US government policies that encourage technical innovations like tax incentives for R&D are working in Symbotic's favor. Potential tariffs on imports could affect supply chains, but since Symbotic focuses heavily on domestic operations, they are somewhat insulated from those risks. Economically, ongoing labor shortages and rising inflation are pushing companies everywhere to adopt automation to cut costs and boost efficiency. Plus, the interest rate cuts we have seen in 2025 are making it easier for businesses to invest in big capital projects like warehouse upgrades. Socially, the massive shift towards online shopping means consumers accept faster delivery time, which in turn demands quicker fulfillment from warehouses. Additionally, there's a growing social emphasis on sustainability, and Symbotic's energy-efficient robots help companies reduce their carbon footprint, aligning perfectly with those trends. Technologically, the rapid advancement in AI is a huge tailwind for Symbotic. Their technology fits right into this explosion, and with over 650 patents, they're leading the pack in innovation. Legally, they benefit from strong intellectual property protections, meaning their patents and trademarks are well defended against infringement. And there are no major ongoing lawsuits or regulatory hurdles that could derail their progress. Environmentally, stricter regulations around reducing emissions and waste are on the rise, and Symbotic's low energy systems position them as a green solution that helps clients keep the standards without sacrificing performance. All in all, I'm rating this category an 8 out of 10. Symbotic is incredibly well positioned to ride the AI and automation wave, but staying ahead of competitors will require constant innovation and adaptation. What do you think? Will these macro trends supercharge automation stocks like SYM in 2026? Comment your predictions below and subscribe to Neural Network. Let's grow this channel together and build a thriving community. Factor number 4, technical analysis. While this isn't the be-all and end-all for long-term investors like us, it's a fantastic tool for timing our entries and exits by looking at price patterns and market signals. I'll keep this straightforward so it's easy to follow. As of November 27, the stock price is hovering around $87, up about 60% since the earnings release. Over the past 52 weeks, it's ranged from a low of $16 to a high of $88. showing plenty of volatility but also strong upside potential in recent months. From a chart perspective, the stock has broken its all-time high, which suggests building momentum and positive buyer interest. It's currently trading above the 50-day and 200-day moving averages, key short-term and long-term indicators signaling a bullish trend overall. There's a massive support at $60 to $65 range, which will act like a trampoline if people start taking profits after the recent breakout and stock drops to that level. Trading volume exploded during the earnings announcement, which indicates a lot of investor interest and could signal the start of a stronger move higher. The recent surge seems to be tied to the positive earnings, but the relative strength index is now close to overbought range. I'm rating the technicals a 7.5 out of 10. There's strong upside momentum after the recent breakout, but a short-term pullback is expected due to the overbought status. Does this technical setup have you feeling bullish or bearish on SYM? Let me know in the comments how you are interpreting SYM's price action. Next up is psychological analysis, or what I like to call the human element in investing. This isn't as critical for long-term investors, but it can help us spot great entry points by understanding market sentiment, just like the technicals. So why does Symbotic stock surge after beating revenue expectations in Q4? The stock has been falling in November from the highs of $80 to the support levels at $50 due to the overall AI bubble market fear. The fear and greed index is in extreme fear territory right now, and the money is being flowing out of the stock market in general. But the recent earnings report flipped the script completely for Symbotic. The company's strong fundamentals, like the massive $22.5 billion backlog, are countering any lingering fears from the broader issues, such as potential new tariffs that could affect supply chains or the ever-growing US national debt hitting $38 trillion. SYM's solid execution and improving metrics are also fueling this confidence, showing how easily the momentum could change for the undiscovered gems like SYM. If the overall market sentiment turns positive, this could extend the rally even further, potentially drawing in more institutional money and retail investors alike. That's why I'm rating this a 7 out of 10. Positive momentum beats winners in the short term, so stay vigilant for an external news that could reverse the rally after the positive earnings report. If the current market vibe has got you hyped or cautious, comment your hype level on a scale of 1 to 10. Share this video with a friend and subscribe to Neural Net Worth. We are turning panic into profit with our playbook on sentiment trading. Now the final factor, leadership. In my view, this is often the most crucial element when deciding if a company is worth your investment dollars, because even the best ideas need exceptional people to execute them. So, who's steering the ship at Symbotic? Let's spotlight the key players, starting with CEO Rick Cohen, who is also chairman of Symbotic's board of directors. Rick is the founder and has been visionary force behind scaling Symbotic from a small startup to a powerhouse generating over $2 billion in annual revenue. He brings decades of experience from the wholesale distribution business, where he serves as executive chairman for both CNS Holdings and CNS Wholesale Grocers. Rick studied accounting from the Wharton School of Business at the University of Pennsylvania. His track record in entrepreneurship, investment, business development, and deep industry relationships make him a powerhouse in guiding Symbotic's strategic moves. Next up is CFO Izzy Martins, who joined in August 2025. As a seasoned finance expert with more than 25 years of financial and business leadership experience, she is responsible for leading all aspects of the company's financial operations and serving as a strategic advisor to the leadership team. Izzy spent over 20 years at Avis Budget Group, where she held a series of senior leadership roles. Most recently, she served as Executive Vice President and Chief Financial Officer, overseeing all financial operations for a company with billions in revenue. Izzy's career began with over 7 years at Deloitte, building a foundation in tax planning and accounting services. She holds a Bachelor's of Science in Accounting and a Juris Doctorate degree, both from Seton Hall University, making her uniquely qualified to navigate Symbotic's growth in a capital-intensive industry. And their CTO, James Kuffner, who came on board in January 2025. James is a robotics specialist with more than 30 years of leadership experience in robotics, both in academia and industry. He is responsible for building and advancing all of Symbotic's technologies and solutions to keep the company at the forefront of innovation. Prior to Symbotic, James held several leadership roles at Toyota Motor Corporation during his long tenure there. Before Toyota, he was a leader at Google for various engineering functions, including heading Google's robotics division, where he contributed to developing Google's self-driving car and managed cutting-edge research projects. He is most notably known as the co-inventor of the RRT algorithm for robot motion planning. James holds a PhD in computer science from Stanford University, bringing world-class expertise to Symbotic's AI and robotics push. The team's overall track record is impressive. These are leaders who know how to pivot and capitalize on opportunities in a competitive landscape. That said, I'm giving their leadership a 9 out of 10. They are innovators with a history of wins, but as always, flawless execution in such a fast-moving industry will be key to their continued success. What's your take on Symbotic's AI strategy? Is it truly revolutionary or just a hype? Drop your honest opinion in the comments. Taking everything we have covered into account, from the innovative business model to their top leadership, I'm giving Symbotic an overall rating of 7.5 out of 10. This is a hidden gem with solid growth and huge potential. I'm predicting it could climb to $120 by the end of 2026 and even hit $150 or more in the longer term if they execute on the backlog and navigate their debt-dependent expansion really well. It's a high volatility play best suited for growth-focused investors who can handle the swings. If volatility keeps you up at night, this might not be the one for you. Of course, predictions aren't guarantees, so keep monitoring key things like macroeconomic shift and company execution. Let me know in the comments whether you're buying, holding, or staying away from SYM. If this video helped you, please hit the like button and subscribe to Neural Network. Thanks for watching. I'll see you in the next video. Until then, take care and invest wisely.